my role as a venture capitalist is to add value beyond just writing a check.
Absolutely. I preach that so much about venture. People all the time are like, hey, can you help me with meeting a VC? I need money. It's like, it's not enough to need money. You need what they bring to the relationship, because it's a long-term relationship.
Yeah. These companies that we invest in, we'll be invested in them for probably more than 7 or 8 years. So we have to be able to do more than that. Not only that, we want to stay relevant for more than that time frame.
Welcome to the Golden Group Strategic Growth Podcast, featuring expert insights, interviews with thought leaders, and business plan triage. Hosted by Kyle Golding, award-winning entrepreneur, CEO, and chief strategic idealist for the Golden Group.
Hello, everyone, and welcome back to the Strategic Growth Podcast. I'm your host, Kyle Golding. I am joined today by a very special guest, Kevin Moore, who is founder and managing partner at Serac Ventures and has a huge, long history of venture capital and financial advising in his background. Don't let those youthful looks fool you. He has extensive background and experience in business that we're going to glean from today. So welcome to the podcast, Kevin.
Thank you for having me.
Quickly, just give the folks, I mentioned that you're the founder at Serac, but give people the 2-minute version of your background and what you've been doing leading up to your role at Serac.
I have a very non-traditional path into venture capital.
Mm-hmm.
Started out as an engineer. I worked for I was a financial advisor for 6 years. Then I worked for the Federal Reserve Bank. Then I worked on the GP side of venture, investing in companies. And I've also worked on the LP side of the industry, investing in fund managers. And then now I'm back on the GP side, running my own firm. All that occurred over a 17-year period.
Right. So 17 years of being in business finance in some way or other gives you probably a pretty unique take on business finance and the startup culture, et cetera, that's happening right now in 2024.
Yeah, I used to think that getting into venture capital or any industry really, it was a linear path. You go to school, you do this, you do that. Well, that's not the case. In fact, I was talking to someone earlier today around every single experience that I've had and every single experience that people have. If they have an end goal, they should try to get as much from each experience because it's going to help them when they get to that ultimate objective.
Actually, my story is not too dissimilar. I spent 15 years in the music industry before I got into marketing as a creative, and then more on the business development, economic development side the last 15 years or so. So same kind of crooked path that no one could have planned for, right?
Yeah. I mean, a road to success is definitely not a paved one, and is definitely not a path. In fact, one of my colleagues at Serac Ventures, he has a great operating background with big tech companies. And he said when he was leading these companies, he would always tell people, hey, there's the mountain in the distance. That's where we're going. And we may not know exactly how we're going to get there, but always keep that in mind. That's where we're going. And that's how that's how I've thought about my career, especially when younger people ask me, what do I need to do X, Y, or Z? I'm like, set a long-term goal, and everything that you do in between is going to help you get there.
And that's really kind of a snapshot, too, of how business works, too, right? Mm-hmm. Someone has an idea for a business, and they go through the process of developing a business plan and structure, financing it, whether they do it internally or have external partners, get into the market. And then often what works well and what didn't work as well is not what was expected, but you follow the opportunities, right?
Absolutely. And I guess for people out there building a business right now, the biggest thing I would say is be prepared for things to not go exactly how you want them to go. And my mentality is things either go better than what I planned or sometimes worse than I planned. But I never expect things to go exactly how I planned. Right. But I also say that we should plan, right? We should have a framework for how we're going to get to a place. Right. And then with every single thing that happens, you can adjust that framework, but keeps moving forward. Yeah.
So as a GP now with Serac, how do you see the industry as overall business in Oklahoma and the influence of venture capital? You know, I think anyone would argue right now is the kind of the best time ever in Oklahoma for venture capital in the last 5 years, and 10 years before that was better, and 20 years ago was terrible. So where we are today, what's the temperature? How do you feel where we're at, and where do you think we're going from 2025 on?
If we continue at the same pace of expansion, of adding more venture capital firms in Oklahoma, then we're on an exponential growth path. When I moved to Oklahoma City after living in Chicago and moving back to the state, there were no venture capital firms other than I2E,
right,
and maybe some others that sort of fizzled out. Or maybe there's a life science firm.
The OSU Life Science? Right.
Or that one, I think William Paiva was running
right,
that firm. I forgot the name of it. But now when you look today across the landscape, there's a number of VC firms in Oklahoma City, in Tulsa, and I feel like it's a asset class that even investors are starting to recognize. Someone said to me the other day, I told them, hey, I work in venture capital. And in my mind, I'm thinking they have no idea what that is. But when they said, oh, I get what that is, that was like a first time ever in 14 years since I've been here where that's happened, and that happened this year. So I think that it's a industry nationally, but to see that happening in Oklahoma City is a really good thing. But I also think that it's indicative of the influence and spread of venture capital across the country, such that entrepreneurship is so much more accessible because of technology, because of virtual work, because of transportation. I mean, even with our airport, we can fly to New York, to LA, to Chicago, to Miami direct. We weren't able to do that before. So having that accessibility and now the transportability to be able to do these things, it's an industry that's sort of ripe for production. Maybe the last thing I'll say about this is there was this sort of notion years ago in the Bay Area and just in popular markets where VC was present that VCs would never invest someplace where they couldn't get to within 2 or 3 hours by plane.
Right.
But now that Oklahoma's on the map and a lot of other similar sized cities are on the map, all that's changing.
Right. Plus, of course, our proximity to Dallas, Austin,
Dallas,
Kansas
Austin.
City, like the middle of the country, obviously is as capable as the coast as well, right?
Yeah, absolutely.
But we also have a little bit different attitude here. I feel like whether it's just running a business or working a business in venture capital partnerships, a different sort of outlook on how to be successful in the Midwest than kind of East Coast sort of, portfolio building and looking for unicorns.
Sure.
Do you see it the same way?
I think founders here are used to doing more with less. And some people I was talking to someone recently about this as being a pro and a con. The pro is they're able to get meaningful traction with a smaller team, with less money. Yeah. Maybe they have some customers. I think the downside is when it comes to getting that later stage capital to invest in their business, one, you have to think about customers outside of your locale. And then two, you have to think about who's going to finance your growth. That's one of the things I've always been a proponent of is as our ecosystem grows and our companies start to show traction, one, the early stage investors like me and others can get them to that first meaningful inflection point, but you're going to need the larger investors that can invest 5 or 20 million into these companies to really help them expand. And again, that mentality of I'm going to do it by myself and grassroots and no large overhead and low use of leverage, all those different things. I think that's great as a concept, but really to grow like the next Paycom, you have to be willing to accept capital from other places.
Right. Now you mentioned that your focus is early stage. So for anyone listening who doesn't quite understand what that means, kind of explain early stage investing.
Generally, when a company is getting going, they are bucketed into this part of the sort of economic cycle of, hey, you're just getting going, you have some paying customers, and you have a small team, but if there's a significant variation in the market with the economy or something, or your customer base changes, you're still at risk of like going out of business because you're not very well capitalized. So everything really at this point depends on the levels of your working capital and your access to capital. So that's the early stage, and these companies are very vulnerable. The management team is not making much money. Most of what they have is in equity, and they're getting to a point to where they're trying to create some sort of intrinsic value, which for them is a good customer base and having achieved the elements of what is the product market fit. So that's the early stage. This is where we invest. And our idea as venture capitalists is to invest in enough of these companies such that at the end of our 10-year fund, 4 or 5 of them have amazing outcomes because the other 20 might fall to these issues that happen to these early stage companies. So that's the early stage. So the growth stage, or the companies in the middle, like the seed stage, is when they've achieved getting rid of some of those risks, and now they're looking for capital to help them expand their team, help them expand their technology. And then the series stage, or where later stage investors come in the door, is helping them to form a formal board, to scale their operations, to open up offices around the country, all that expansion
build out
strategy.
C-suites.
Build out the C-suite.
Right.
You're not doing that when you're at the early stage. And then then beyond there, it's just more and more of that until you have an exit.
And of course, there's angel and startup that's even earlier than that. But that's not a space that you guys actively participate in.
No, so angel and like the startup and the friends and family rounds, those are absolutely critical stages of the business. But typically those stages occur or can occur when there's like zero revenue. The product may not even be well developed. There may not even be a team. It's more so, I have this idea. I need some capital to test whether or not my hypothesis is correct.
Huge risk involved, and lots of variables that are hard to control.
Yeah, and those risks are ones where the people investing in you are really banking on who the founder is, right? And that's okay. I think that this type of industry is based upon risk. When people invest in venture capital, they're looking for beta because they have alpha somewhere else, whether that's in the stock market, whether it's in real estate, more stable assets, maybe they own their own business. So I think they're okay with that. No entrepreneur should ever feel bad about losing, air quotes, someone's money if their business doesn't work out. The investors already know that it may not. So take the risk.
Of course, we're assuming that they have put the extra effort in, they're following best practices.
Yeah, assuming all that.
Yeah, they're doing everything right because they're in a partnership, so they're already being observed in that way, right? Are there particular verticals that you guys like to invest in and ones that you avoid?
This is a good question. And I feel like my role as a venture capitalist is to add value beyond just writing a check.
Absolutely. I preach that so much about venture. People all the time are like, hey, can you help me with meeting a VC? I need money. It's like, it's not enough to need money. You need what they bring to the relationship because it's a long-term relationship.
Yeah. These companies that we invest in will be invested in them for probably more than 7 or 8 years. Mm-hmm. So we have to be able to do more than that. Not only that, we want to stay relevant for more than that time frame. Meaning we're investing at this period. If they're going to be successful, there's going to be bigger investors that come in the door to try to take our position. So it has to be more than just capital. So in regard to how we add value or what sectors we focus on sectors where we actually have experience. The first 8 years of my career were in financial services. So naturally, I look at a lot of financial services companies, fintech companies, have a guy on the team who works with a lot of SaaS companies because that was his background. And then a third guy on the team who does a lot of work with like B2C companies. So we can cover the gamut, but categorically it's fintech, B2B SaaS, and some B2C or like commerce enablement companies. These are broad categories, but within them, the mediums of what each company does is a little bit different, but functionally it's like the same thing. For example, I just got off a call before coming in here with a fintech founder who was talking about compliance and KYC and all these different AML things that banks and financial services providers need in order to operate. Well, because I worked at the Federal Reserve Bank, I can speak to the dynamics of what that actually means and what they need and how to develop that. So I'm adding value. I have no expertise in life sciences. So I wouldn't tell a life science founder to do anything because that's just not my expertise.
But you know how to get a hold of experts if you need to.
Absolutely. And, we built a group within Serac Ventures called the Serac Ventures Guild. It's 10 people who have expertise in different things.
Oh.
And on a quarterly basis, we ask our existing portfolio companies and potential portfolio companies to present their company to the entire guild via Zoom, tell them what they need, and each person on the call has the opportunity to help that founder with whatever they're looking for.
Right. You're also a Techstars mentor?
I am.
So that's part of this whole process too, right? Is mentoring, giving back, just kind of helping everyone else along, which is that rising tide that lifts all boats.
Yeah. Techstars has been great. I'm working with a fintech founder now who's building a lending company. Her name is the company's called Catapult, and they're helping CPG.
Great name.
It's
I like
cool,
that. Yeah.
It's a company that's helping CPG brands to get access to working capital to fund their businesses. A lot of times these CPGs get these massive purchase orders from large retailers, but they can't fulfill it.
Yeah.
So her company bridges that gap. It's been interesting to work with her at first it was a weekly basis. Now we meet on a bi-weekly basis to talk through the operational challenges, the go-to-market strategy. We have good meetings and sometimes we have frustrating meetings, but it's, I feel like I'm working inside her company, and not literally because they're doing all the work, but more so providing the insight and the guidance. I like doing that.
Right.
The difficulty in that, it's very hard to scale. So we can't do that with every single company.
Sure.
So the guild is important, having other team members is important, and relying on your network is important as well.
And organizations that extend your network, like OVF.
Like OVF as well.
Right.
Organizations like them, there's even now these companies that are forming where they'll call you, a VC or a company, and say, hey, we have a group of experts that charge X number of dollars per hour.
Okay.
If you'd like to hire any of them to work with any of your startups, you can do that too. I get a ton of those calls.
I bet you do.
But I think it's one of the things where VCs are people are trying to figure out how to scale VC and add value.
Right.
And they know that as VCs, we can't do that for every single company.
Right. Now, Techstars is in Tulsa.
Techstars is in Tulsa, yep.
You're based here in Oklahoma City.
Yep.
Are you invested in businesses in both of those metro areas?
We just started in deploying capital in technically in the first quarter of this year.
Because Serac's a relatively new company.
I started Serac in January of last year. Took the first 3 months of the year to get the infrastructure built, and then spent the remainder of the year looking for an anchor investor. So we did that, had our first close in March of this year, and now have started formally deploying capital and have a really good pipeline. We have a number of companies that we're looking at, some in Tulsa, some here in Oklahoma City. The first few investments that we made were based upon companies that I had known and have been working with prior to my starting the company. Those companies are not based here, but like I said to someone else today, we are an open door. We want to talk to as many founders that we think fit within our strategy as possible, regardless of where they are. But the fact that we're based here in Oklahoma makes the ones here a lot more accessible to us.
Sure. But you mentioned earlier the fact that business can be done nationally, internationally because of technology, things like that. You even mentioned remote work. Tulsa has a really successful remote work program that is attracting a lot of talent to Tulsa. What do you think? What do you think of that program, and how do you think that effect is going to benefit not just Tulsa but the whole state of Oklahoma, probably the Midwest?
I wish we had that here in Oklahoma City.
I do too.
I mean, we need a person or organization to step up and do something like that, because I think it's been so good for Tulsa. And the follow-on, the statistics from that have been, I think, like 80 or 60 or 70% of the people who have come to Tulsa for that program have stayed after their required time period.
Right.
I think it's a great program because with so many jobs going virtual, it's so much easier for them to sort of live where they want and make really good salary.
Like live in Tulsa, lower cost of living, as opposed to Boston or San Francisco or New York or even Austin.
I do wonder, though, Kyle, if as some of these tech companies and others who were huge proponents of virtual work and requesting that people come back into the office, could that impact negatively Tulsa Remote and other programs like that? I don't know.
Right.
But I think that anyone could argue that it's been a great program. I wish we had it in Oklahoma City.
I completely agree too.
Yeah.
Now, something we do have in Oklahoma City because it's statewide and you have a live experience was I2E.
Mm-hmm.
You used to work at I2E. So what's your take on how the state putting kind of their money where their mouth was back in the day to form I2E? Now, of course, they have Plains Ventures that's doing their fund. How do you think now that ripple effect has happened? How much success are we seeing in VC in 2024 comes from the fact that I2E has been around for 20-something years now?
I would equate I2E in the same way as I forgot what that company was called that was the first tech company to receive money from the government in Silicon Valley that effectively started Silicon Valley. But it was a group of researchers who, after World War II, they decided to start a tech company with a ton of funding from the government to build technologies. And that was the genesis of that. Man, if someone remembers the name of that company, as a tech person, I should know this. But I2E is that. Without I2E, nothing would exist.
Right.
And having worked there before, I know that the state was incrementally reducing the amount of capital that they were giving to I2E, but they still made it work. And Plains Ventures is a testament to that. It started with Oklahoma Angel Fund 1, which I created, Oklahoma Angel Fund 2, and then obviously Plains, and now there's a larger platform of funds that they manage. And I'm a board advisor at I2E Management, and I have a tremendous amount of respect for the organization. I consider them family.
Yeah, there's a huge amount of awesome people over there doing amazing things. Just attended the Loves Cup award ceremony earlier this week, and that's another application of what they're doing by getting young people in college to think about entrepreneurism, starting businesses, and of course, hopefully keep those businesses here. So the work they're doing, I'm with you. I have so much respect for the work they're doing and the people that are involved. What was it like going to work for I2E, like coming from banking, from being something that was more on the traditional side to something more now on the venture capital side? Obviously, it stuck with you because you're still in VC.
I decided I wanted to get into VC in 2006. I wrote down my goals. I wanted to do this. I wasn't sure how. And obviously, I went from engineering to working at Northwestern Mutual to working at Morgan Stanley. Then I went to the Fed. And when I went to the Fed, I thought to myself, man, it's just so far off from what I want to be doing that how am I going to get into venture from there?
Because, a lot of people would think maybe working at the Fed is would be the job, right?
Yeah. And my job there, I was an examiner. We would go into banks and we would look at the loans that these banks were giving out to make sure that they were kosher. And I hated that job at first. But after a while, I started to recognize that all this is a deployment of capital. And the bank has to validate these businesses. So every single business that I looked at, I learned something of how they made money, how they operated, all these different things. And it became almost like a consulting thing where you're trying to understand the deployment of capital and does it make sense? And that transferability of that skill set tremendously helped me when I started doing that with private companies, because most of the time banks are giving money to private companies. So not only that, but then the analytical rigor that came along with that was certainly helpful.
Right.
Scott Meacham was running I2E at the time. It just so happens that I think his family owns a bank. So when he saw my background, he was like, okay, Kevin, come over here.
Yeah, because that's his background, right? For him,
Yeah.
his family.
Well, he's an attorney, was a state treasurer. He knows numbers, et cetera. Scott's great. Hope he's enjoying his retirement.
So, speaking of background, just growing up, like, where did you grow up, and what kind of kid were you?
Very curious. I grew up in Tulsa. A very curious kid, and sometimes that curiosity was productive, and sometimes it wasn't. I don't tell a lot of people this, but now I'm pretty open about it. But I have a very non-traditional path into venture professionally, but I think a very non-traditional path in general. I grew up in Tulsa. When I was 1 or 2 or 3, my parents moved to Claremore, Oklahoma.
Okay.
My dad was working at a factory there, and he was involved with a church. My parents split when I was 5 or 6. I was in kindergarten, and it was tough at that point. My mother moved back to Tulsa. My father lost his job. We were homeless for a couple of years, living in this small little shed on the side of our friend's house. There was no running water in there, no bathroom. It was tough. And I was in elementary school, walking back and forth to school and sort of dealing with the shame of living in that type of situation. Then we moved back to the Tulsa area in these sort of projects, if you want to call it. And those were probably the toughest years of my life. Like, I did not envy my childhood. And most people who were in those situations didn't turn out like I did.
Right.
So now that overcome all those obstacles and arrived to where I'm at today with like beautiful wife and 2 kids and, just like a normal life. I always say you never judge a book by its cover, but all the difficulties I experienced sort of made me who I am today.
Sure.
And I think about that quite a bit in regard to even the name of Serac Ventures. Seracs are these large ice formations that form at the tops of the highest mountains in the world.
Oh.
And if you're a mountaineer trying to get to the summit, you got to navigate through these things. And they put a lot of people down. They're very difficult. So our thought was, we want to work with founders and work with people who are okay with navigate or fighting through these obstacles that they might encounter in life or in their business, because they're just trying to get to the top, and we want to help them do that. That's sort of our mantra, guiding founders to the top. So for me, I can relate to that. I love just understanding the story of each founder that we're talking with, because I want to understand, is this the type of person that will run through a brick wall to be successful? Because I had to do that, and most successful people do.
I like the story behind Serac. I didn't realize what that was. I learned a term today, and I like that as far as your branding process there. You also mentioned, not judging a book by a cover. Let's talk about your book.
Okay, cool, yeah.
To tell everyone about your book, Starting Your Own Venture Investment Fund.
When I was at I2E, we were heavily dependent on the state of Oklahoma's dollars. But to deploy that capital, we had to have 50% match from private investors. Hence the reason why I2E started Seed Step Angels, which was a group of private angel investors. So I said to Scott Meacham, we should raise our own private fund. That way we don't have to go out and sort of herd cats to get that other 50% of capital. We can just have that in-house. So it took about 18 months to get that going. Myself and Mark Loinger, we went out into the market and talked to investors. For that first fund we raised, it was like sub $2 million, but it was a concept to figure out if it could work. That process of trying to get all of that going was so difficult because there was like no one wanted to share information. Information was hard to come by. This was back in 2017 or 18. And I thought, surely there are other people who want to understand how you do this. Right. So I just wrote a book about it. It was my contribution to the venture capital industry of just my inside story and the how-to of how to do it. At the time, I had just started like blogging, and I wasn't doing it for any sort of fame or recognition. I just thought I've always wanted to be a net contributor to the industry and not be someone that was just taking. So the book, my blog, things like that were just my way of giving back. Well, turns out so many people have read that book, and thank you for writing this. And I wrote it deliberately to be short and to the point. People have contacted me from all over the world about that book. And for me, anyone who contacts me and says, hey, I'd love to talk about how you did that, I'm more than game, because it was so hard to do.
That's so cool. You also, one of the ways you give back, you're a very active contributor on LinkedIn. You post a lot, but you answer a lot of questions too.
Yeah.
I'd mentioned a couple of people who were coming on the podcast. They say, I get so much out of his content on LinkedIn.
I am a big believer that if you're going to talk about something publicly, it should be beneficial to the masses.
Yeah.
One of the things I don't like about social media and even LinkedIn is when it's just a bunch of like, look at me, I did this, I went to this conference, I took this picture. I'm like, what does that do for me, right? So my mentality is, if I'm going to post, it's going to be something of value, something where I put some thought into it, something to where, yes, I want my stamp on that. I think everybody should do that.
I agree totally.
But not everybody does.
So you can now understand why I absolutely wanted you on the podcast, because you bring so much knowledge, insight, and perspective to not just business, but venture capital and funding for business, attitude about how to go about things, be successful, how to get through the Serac and make it to the top of the mountain.
Right.
Did I do that right?
You did.
So I appreciate you being on the podcast. I've interviewed you before for the Oklahoma Venture Forum podcast, so now I'm excited that I've got you on the podcast
awesome.
here. Looking forward to seeing how people react and see maybe what kind of social media interaction we get when we post this episode.
Perfect.
So appreciate it. Today we've been talking with Kevin Moore. He is a founder of Serac Ventures, which he is a GP, is a general partner there. He has a background in finance and all types of things that go around business. And he is someone who has made it to the top of the mountain despite that Serac trying to hold him back. Appreciate you being on the podcast today, Kevin.
Thank you, Kyle. Love it. Appreciate you.
Thank you for listening to the Golden Group Strategic Growth Podcast. Please subscribe so you never miss an episode. Follow the Golden Group on social media. For more information, past episodes, or to contact us, please visit thegoldengroup.com.